Good day. This is the Elliott Wave weekly update for the S&P 500 being recorded on Saturday, August the 31st, 2024. I am going to start with the cash market. Let me just change that. And I will go up to the daily chart. We're going to start on the daily chart today just to kind of take a focus, because what I'm looking at right now is I'm satisfied with this high being at the top for a minor third wave. Now, minor third wave of what moving up minor third wave being in place. What we're in now is a minor fourth wave. And so what the decision that the market is making and that I'm tracking is whether or not that the first leg down, which I have marked here as the completion point for minor wave 4, which would suggest we're in a minor fifth wave, and we will make new highs and likely move a little bit higher than what would be expected if it were the opposite, in terms of that this was only minute wave A of minor 4, and what we're working up is to the completion point for a minute wave B of minor 4. But that suggests that we're going to come back down in a minute wave C to complete the minor 4 and end up at or around the exact area where we just were at the beginning of August. Let's go there. And that low was 51.19. That's in the SPX. So, and that would make a flat, basically, right? An ABC flat for minor wave 4. We go up in a minor 5, and then we finish intermediate wave 3, and I'll go over that in just a moment, and then drop back down in an intermediate fourth wave, and again end up back in the same areas of the minor and the minute fourth waves. So, and that would be an intermediate degree fourth wave. So we're going to come into the same areas and then go up in an intermediate fifth wave. And it is after we're completing the intermediate fifth wave, the primary fifth wave, and the cycle third that we will tumble much faster, harder, and for a longer period of time as we do that fourth wave down. So we're just doing series of fours. And so, yeah, until we get all the way up to where it's like, okay, now it should just really just fall apart. But by then, who knows? But for right now, my focus is on the possibility that minor 4 is complete. We're in minor 5, or we have one more swing lower to complete minor 4, a rally, which should take some time, but a rally nonetheless. It should take us to new all-time highs, back down again, and then up one more time. So that's a lot of trading, and that's a lot of time. So I'm out for all of this to be complete sometime in 25 or possibly even 26. So we're just walking our way out to the completion point for some larger moves. So we're going up, right? We're going up a degree. So we're right now working out the minor degree. That'll work up to the intermediate degree, and then we'll work on that 4. And then when that's done, we go up in an intermediate degree fifth, and then we finish the primary. And after the primary, we're up one more. So what do we got coming off of that? Well, the first thing is a primary A wave, right? So it's a cycle degree fourth wave, and it's a primary A wave. And primary A, we got all kinds of things. So it's a long, drawn-out process that's going to take a long time. Now, back to the reality. So I'm just going for the next week or month, maybe towards the end of the year, for what we could be doing here. So once again, I'm satisfied that we've completed a minor 4 and minor 3, excuse me. And I'm going to take this out and just take a look at the 5-year, and that's going to show more, right, of what exactly where we are. Here's the primary 4. That was in October of 2022. So from that point, we've been working on a primary fifth wave. And within that are going to be 5 waves of intermediate degree. We have 1, 2. We've got the 3 coming up. And that's what we're going to look to be completed once we have, and we're almost there. But we've either got confirmation or yet to reach that high in a minor fifth wave. So that's the point that we're at. And it's decision time, really, But I want to now walk with you a little bit through this decision process of what the market may or may not do. So again, this is labeled as if that low back on August the 5th at 51.19 in the cash market completed minor 4, then we would be walking ourselves higher or going higher in a minor 5th wave, which consists of 5 waves of minute degree, which we've done 1, 2, 3, and 4 in my view. That leaves us in the process of tracing out a minute 5th wave up. Now, this is the daily chart. Now, just using and staying on the daily chart, what we have available to us is the following in terms of Fibonacci. So I'm going to bring it down. That was the daily. I'm going to bring it down to well, actually, I can leave it right here and I'll bring it down in a moment. So what we have coming up is the white is the minute degree for the minute wave 5. The orange is for the minor wave 5, and the yellow is for the intermediate 3rd wave. So you see what we're finishing, and now we're reaching up into levels where all 3 come into view. And that's important. So as we're moving up this ladder, we're going to be able to determine, okay, what degree are we going up in and where are we finishing and what's going to come next. Ultimately, I am looking for up into the territory for the intermediate 3rd wave. But you see that zone can get pretty wide. We have 59.67 on the bottom and 63.43 on the top. So timing, right? Are we going to go up, put in another swing lower, put the minor 4 here, do a minor 5, or is minor 5 going to come up from here, could get as high as that if we have a blow-off type of a top? I'm not looking for that at the moment. I am definitely not looking for that, but I'm thinking that we could put in this minute wave 5, and it could get up to, I would think, between 57 and 59. But what I'm looking for is minor 5. If it's completing, yeah, it can come all the way up to almost 6,000. Now, the other side, right, that we're still in this 4th wave, or the 4th wave, the 5th wave can come up short. But if indeed we're going to look at this as more of a ABC flat for minor 4, so far we're very close. That high is 56.69. So, or say 56.70 in the cash market. We have been up at 56.51. And I think we put another new high in there somewhere at 51. And this guy is again 51. So we equaled at 56.51. So we're very close to it being an absolute flat. So, but what else can I consider in terms of this is still going to be the minute B wave and not counted as we have it, that this would be AB. Down here, 1, 2 would be AB, and then we have 1, 2, 3, 4, but not of minute, but of a minuet degree. And then what we're filming is a minuet 5 for the minute C wave of the, a minuet wave 5 of a minute C wave of a, I got to take it down again. I'm too high up. It should be a minute B wave. So this is minute A. This would be minute B of 4 with the C wave down. That's the important part. So it would be 5 waves up. This would be A, B, and then 5 waves up to complete wave C, and then that B wave. Then we come back down to that same area. We'd be looking for pretty much a flat. But here's what it can do and be an irregular. So I could leave it still that the 4's not done yet for a while. We have 57.96. That's 1.236. We are in irregular territory. So actually anything above 56.70 puts this into an irregular B wave. If it were to stop, say for example, it got to 57.54, not quite up to that ultimate for 1.236, but it got up here and turned and just started to decline strongly. Well, that's going to give a stronger indication that it is an irregular, not full bore, excuse me, but it is an irregular, and that we're going to come down and likely slightly exceed that level, but at least probably reach that level. And then we put a minor 4, and then we go up in a minor 5, get up towards this 59.67 to maybe 66, 6,060 or 6,000, up into there, put in that minor 5th wave and the intermediate 3rd, and then we have this possibility as well. And then we come back down in an intermediate 4th wave. And that's where I think we're going now out into next year. Before for them, we're going to climb up in an intermediate 5th wave. And that might come, after, all of the recession fear, all of this stuff, all of the devaluation, all of the, the adjustments being made for the rate cuts against other things. We can come down, finish that, and then start on a stronger intermediate 5th wave up. And that's kind of what I'm looking at into 2025 as well. But immediately between now and mid-September, we do have that Fed meeting. Leading up to that Fed meeting, we have all the different variables that the Fed would consider. My feeling is they pretty well have likely concluded that if everything remains in line and then going in the same direction as it is, without a burp from employment numbers, without a stronger burp from one of the CPI or the PPI, as long as things remain within their range, then I think, yes, that they will cut and likely start to ease probably by a quarter. And that would be enough to probably give a good bump to the market. But I think that if they do it, then we might get up in that intermediate 3rd wave, complete it, come back down in a 4. And that will be the after reaction, which is like, oh, okay, we're lowering the interest rate, which is great, but now it's got to filter through so that other things start to come down, including equities. So that's kind of what's going to happen. And also the shift will likely then go to, locking in certain levels in the bond market. So we'll see money shift, all kinds of things. So that's this, both sides. So here, I'll just repeat them. As we could get all the way up to 58.69, but in its way, we have resistance at 56.82. Okay, that works. And then again at 57.54. And that could complete still a B wave, right? If this is minute wave A and this is going to be minute wave B, that's a B wave. And then we swing down to complete the minor 4. That's one. That's very possible. And those are the levels. If the market gets a little bit more momentum to the upside, well, then we could be coming up in a minute wave 5. And that one would project up to 59.67 or possibly even towards that 6,000 level. And then we have some interim in here as well. And if that's the case, then this did complete the 4, and we're going up and we're going to complete the 5. That's going to be intermediate 3, and we come down. And that also can happen by the day the Fed makes their decision known, and then the aftermath of that. So the intensity of the upside and then the intensity of the downside, that's really also a part of this decision process that I think the market's going to have to make. And at what level will it take place? Is it going to take place from lower, which will lessen the amount, right? Because if we only get up to like 56, 5,700, or the level, sorry, about 56.75 to 57.54, if we only get up into there, then the drop is likely going to be right back to here. But if we get up higher, that drop is going to be much harder. In other words, it's like we're expecting the rally to be stronger, which is going to be enough to get us up towards that 6,000 level, possible, but at least above 59, I think. Then even up there, that's going to push it to an intermediate degree drop. So whether it's a minor degree drop, then probably it's going to be a lot less, several hundred points less. But ultimately, either one, or actually not either one, but both, would project back to that same level, right? If it's still the minor four, here's our level. That's why that box is still there, because this is still alive. It's a work in motion. And if it goes to the intermediate level, then this is what's going to come into play. The box is here. The box will have moved. All right, let's go over and take a look at the ES, which of course fills in some of the differences. And this is now the other view. And I'm here on the daily. So let me just kind of bring that up a little bit. And same deal. There's the box. There's minor 3. This is the count where minor 4 is complete. And it did basically come down pretty much closer to that low. And so now we are in minor wave 5. Now, both sides in play here, these two levels right here would be associated with if wave 4 is not done yet. And this is A, B, C. So I have to, if I'm going to allow it in the cash market, I got to allow it in the futures market because they kind of mirror each other. Just this one has premium in it. So that would suggest that it's ABC, and that is minute wave A, and this is still a minute wave B, and this is AB, and then this 1, 2, the 3 goes up to here, the 4 goes over to here, and we're in a minuet wave 5 up, and those levels are right here. They can go all the way up to there actually, but here they are. And if they do, this one 56.76 I don't think would be here in the futures market. 57.21 is the high of minor wave 3. If it got to 56.76, it could be a failure, but I would think not. I think that there will be enough energy to drive it higher, and we get above 5,700 again, and then as high as 57.48. And that could still be within a B wave. It could get as high as 58.36. So all of this overlap each other and leave open the potential that we get up and it's an irregular and we come all the way back and come back right here first, and then it's minor 4. We go back up in a fifth wave, a minor fifth wave, to complete that intermediate third. And now look where we're looking, because the intermediate 3 is so much larger than the first two, so it just really, it pushes the numbers. So 3.618 is 62.41. So what makes more sense to me at this juncture, when I compare both markets together, would be that this is likely going to be finishing intermediate 3. And then we come down to intermediate 4, and we go up again to finish primary wave 5. So what we'll be going back up in is an intermediate 5th wave to complete a primary 5th wave, to complete that cycle 3rd wave. And that's pretty high levels. Those are big degrees. We're getting up there. This discussion I've had before, and if you walk with me, I went back to the highs that we made in 2021. Now that was on the premise that it's like, well, I thought that they wouldn't have. I thought that it would take much longer for it to roll out, which is one reason why the degree came down. So instead of it being in cycle A, or even a primary A, working on a much larger degree drop correction, did not fall into place. And this is, it fell out of place. It just had to shift over. And that time the alternate was that it was primary wave 4, and that what finished in January was primary wave 3. So with that in mind, we're in that primary 5th wave now. And within it are going to be 5 waves of intermediate degree. So once we finish intermediate wave 3 to the upside, which is in sight, then we basically are 2/3 of the way to finishing the whole larger big move on a cycle degree. So much more fun to come. Now, here in the future, what we can look for. All right, so if we're going to talk the trading, what we can look for is that if indeed this fourth wave is not complete, so let's go over both, and that's the one I'm going to start with, then we can go up and finish still a fifth wave, but the limitations of it are going to be a little bit different. We have first 56.78 or 56.80. That I think we're sitting right below it right now. So it's not really going to work. But I do think 57.48 could work. That would be a new high. So it could be still slightly irregular, not fully irregular, just slightly irregular. And then we could finish a B wave. We drop back to this area, maybe a bit lower, which is fine because we have that additional support back down towards the 5,000 level. So wow, look at that, back in play. It'll be amazing, but it's a possibility. So once again, I do not plan people's trades. I do not, all I'm doing is just saying what the possibilities could be. And it's going to roll for several months. I think, well, at least probably till the end of the year. If this is only going to complete minor four, then I would think at least September, October, November, and then we're into December. Maybe we have a December rally. So we find the low for minor four in October or November, and then rally the month in December to kick off that finishing run. So possibilities. But in the meantime, what can we look for? If we get up to this level and we trip and fall and these levels are rejected hard, well, then it's going to be more in line with that. It's a C wave down. And we'll be monitoring that. And then we have our levels. And at the same time, I'll be able to judge whether, depending on how high it gets. Remember that here, minor 5 would be 1.618 times the length of minor 1 at 57.99 or 5,800. So we could complete minor 5 and intermediate 3 from there all the way, right? This particular fifth wave could go up, but it also, if I'm looking at it in this respect, it's going to complete the minute 5 and it's going to complete the intermediate wave 3, whether that happens at 58.65 or 6,000. Same result. These come into play if it's going to be just a irregular with a swing down and moving the 4. So a lot of possibilities, and they're all coming in here. Which one will be what? We'll find out. But in the interim, whether it comes up to here or whether it comes up to here, we'll be looking for that thing to come down and break below there. That much we can start with. I'm not going to play it out like, oh yeah, it's going here, so I'm buying those puts now. And then just watch the money just disappear. No. So that's not what I'm saying. Now let's take a look, as long as we're here on the daily, let's take a look at the moving averages. And they're actually not as bad as they are over the NASDAQ, but they're all pretty flat right now. They're all very flat. I want to open this up and look at least on the weekly. On the weekly, you can see they're still very much primed to continue higher. So the weekly is not topped yet, according to the moving averages. We definitively would look for a break below the 20. On the first case, is it coming down in a C wave, a 4? Is it coming down in an intermediate 4? We'll put our clues together. But on the weekly chart, I'm looking for it to break that 20 first, obviously, turn it, and these will likely go flat and start to turn as the market were to come down. Now, if we come down and we stay flat here, then there's a very strong possibility, of course, that it's just the 4. We move this over, the minor 4. But all to be determined. But they're not negative yet. They're still sitting pretty good. And on the weekly chart, we got 1, 2, 3, 4 green bars. So looking pretty good for right now on the rally part. So it could be a minor 5. All right, that's where I'm going to end it. And so, as I discussed earlier, next week, economic data wise, it'll be Friday when we will get the September employment figures, and those will be closely watched, moving into close to that Fed meeting. And we have PMIs during the week, purchasing managers indexes. We've got ISM, we've got S&P, and several others, plus a couple of others, economic numbers as well. But major one would be the employment, which will come out Thursday and Friday. All right, the next Elliott Wave Daily update will be on Tuesday, September the 3rd.